thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come something from the economic calendar or a combination of that with headline news or geopolitical. And sometimes it gets even more confusing when sometimes the market sentiment change and you get good news and now bad news and vice versa, and people are just wondering what's going on here. So we try to get into that and get into delving into what's really impacting it and get that information out to you. So that way you have a little bit more information for your reference. A little bit about myself is I'm a loan officer. I do work with a national lender. We do loans in all 50 states. So we'd love to be of any service for you if you're looking to buy or looking to refinance. So please reach out. But more than that, we are here also to be a resource for you folks. So if you guys got questions about anything, we would love to be able to help you guys out. So please feel free to reach out as well. Um, so without further ado, we'll jump right into our report. We'll start off with the economic calendar. We did have a report that would normally be released today. As I indicated yesterday, we do have Jobs Week this week. The ADP normally releases, but that got rescheduled for tomorrow, so that will be released with the initial jobless claims tomorrow. But today we got the weekly MBA report, which is the mortgage loan activity report. So, which is kind of nice. Just kind of glance at. It's not it has any impact on the markets, but kind of gives us an idea if uh, you know people where things are at. Like on the purchase side, are we seeing more loan applications being taken out for purchases? Are we seeing more going out for refinances? Are they still going high? And what we're seeing, of course, is we're seeing a slight dip in the purchase side from last week, and then from last week on the refinance side, of course, we had a bigger dip, like around 40,000, 43,000 people drop from that one as well, loan application wise. But here's one here is construction spending for the month of April. It's not a high impact one, but it does give us a little view of where things are at with construction. Uh, so in March, it was revised slightly higher from 0.1% to 0.3%. Forecasts come for 0.5%, and it came in a little more underwhelming at 0.2% there. Now, here's one that has a little bit more of an impact, which is the ISM manufacturing PMI. Gives kind of an inclination of where manufacturing is in an overall state, and anything above 50 is considered expansion. And this is for the month of May. So April is at 55.4. Forecast is supposed to be a slight dip to 54.5. However, it did rise instead of dip to 56.1, which is obviously good news for manufacturing side of things. So showing the economy is doing decently in any case. So let's take a look here at mortgage-backed securities. Yes, so we had a bit of a sell-off. It did test out. We were testing the 50-day moving average. We kind of moved in the middle here, and then today we are testing again now even the 25-day moving average. We're down about 48 basis points. This will translate into our rate sheet's not looking as well as yesterday. So that's almost what that means is the 50 basis points is basically a half a point in the fees. So let's say yesterday you had a no point loan quoted to you, it would cost about a half a point today, is what that means. Rate sheets, of course, aren't as looking as well. Now it's taking a bit of a cue. Obviously, from the ISM, it's looking at that, but it's so they're kind of the sentiment is that okay, the economy, jobs, everything's not that bad. So that will keep the Fed most likely on its path of the tightening policy. Today, we also are seeing a part of that. Also, is uh, their reduction of the balance sheet. So today they're going to start doing reducing of the balance sheet. So those gradually kind of get into it. So this month won't be as big, but it could have some impacts on mortgage rates, of course, because now you're seeing them most likely going to be selling off on some of that. Instead of buying, they're going to sell off some of the mortgage-backed securities as well as treasuries from the balance sheet. We do got a few Fed speakers out there, so we'll kind of wait and see. They it could have some impact. There was one, trying to remember what his name was, but he did indicate that he wants the markets to make no mistake that even though they may have a pause, that doesn't mean that they are going to bend to what the markets want. So first and foremost is the Fed needs to get inflation under control. Everything else will follow from there. But for the most part, they need to get inflation under control, as many feel that they are behind the curveball behind that as well. So again, our mortgage rate's a little bit higher today. Treasuries did spike too. It's also challenged its 25-day moving average, which is a little bit higher than it was. We're at the 2.94 range right now. Yesterday we were right around 2.84, and today we kind of spiked above that, um, spiked above that level as well. So this could add more pressure towards mortgage-backed securities as we continue if this keeps rising. All right. Lastly, we'll take a look at what the average rate is for mortgage for conforming loan limit out there, and it do has points built into it. So the 30-year fix is now up to 5.47, and then we got the 15 years now up to 4.82 now on those levels. So if you guys would like a rate quote, or if we can be of any other service or answer any questions for you guys, please reach out. We're here to help you guys out. We'll just wrap this up, and if you guys like these videos, please help us out. We'd greatly appreciate if you guys could smash that like button, share us. We'd greatly appreciate that. Get the channel out there. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys in tomorrow's video. Bye-bye.